Open a modern economics textbook, and you'd think global finance was invented by governments, designed through legislation, regulated by central banks, refined by economists. But that's the fairy tale. The real history is much older, stranger, and far more human. Before institutions, before regulation, before the idea of a financial system even existed, the world's money moved through secret networks, merchant diasporas, religious orders, trading guilds, family dynasties, and underground webs of trust that crossed borders long before nations could understand them. The first global financial system didn't run on laws, it ran on relationships, it ran on loyalty. And often, it ran in the shadows. If you love the real stories behind money and power, hit like and subscribe before we go on. Now let's dive in. To understand why, imagine a world almost prehistoric compared to ours. No central banks, no stock exchanges, no unified currencies. The value of your coins changed every time a desperate king shaved metal off the edge, and long-distance trade was a gamble against pirates, warlords, storms, and plagues. This wasn't just risky. It was financial anarchy. And in that anarchy, identity, not law, became the foundation of commerce. If you belonged to a group with shared language and obligations, your wealth could travel safely across thousands of miles. If you didn't, you were alone. So the earliest global financial systems weren't built by countries, they were built by communities. One of the earliest was the Jewish merchant diaspora, some of the only people able to trade between the Christian and Muslim worlds. Multilingual, mobile, and tightly connected across 3 continents, they saw opportunity where everyone else saw borders. When kingdoms couldn't communicate, they sent letters through cousins and partners who never broke the chain of trust. This became the first reliable international credit system, because loyalty was stronger than local law. But they weren't alone. Across the Mediterranean, the Venetians and Genoese built their own empires. Their merchant houses invented maritime insurance and credit partnerships, and built intelligence networks that gave them information weeks before other traders. Venice wasn't just a city, it was a financial operating system running on merchant trust. Genoa funded Spain's imperial expansion through bankers who traded risk like modern hedge funds. Further north, a different kind of network arose, less like a family, more like a corporation, the Hanseatic League. A federation of merchant cities, Lübeck, Hamburg, Riga, Gdańsk, dozens more acting as one commercial empire. They enforced monopolies with their own fleets and standardized weights, contracts, and credit terms, behaving like a multinational conglomerate 400 years before corporations existed. Meanwhile, far to the east, the Armenian merchants of New Julfa built routes from Amsterdam to Bengal and from Isfahan to Manila, moving silk, silver, and credit across hostile borders, using only family ties and multilingual correspondence. European traders trusted them more than their own governments. Everywhere you look, the pattern is the same. Where states failed to provide trust, networks created it. But the most dramatic network came from an unexpected place. An order of warrior monks, the Knights Templar. Founded in 1119 to protect Christian pilgrims, they soon discovered something more powerful than swords: finance. They built secure compounds across Europe and the Levant, accepted deposits, and issued coded letters of credit redeemable across continents, effectively inventing the international wire transfer. But as their wealth grew, so did their danger. In 1307, King Philip IV of France, drowning in debt, arrested thousands of Templars and seized their assets. Yet their system survived, absorbed into later networks. By the late Middle Ages, the elite shifted from religious orders to powerful families. The Italian dynasties Bardi, Peruzzi, Medici, and later the Fuggers in Germany became the backbone of European finance. They built branch networks across capitals, moved money faster than royal messengers, and invented modern accounting. The Fuggers alone funded the election of Holy Roman Emperor Charles V, proving private finance could decide public power. Their influence came not from armies, but from information speed and credit leverage, the same forces shaping markets today. But financial power isn't only about money, it's about knowledge. And one network controlled more of it than any government: the Jesuit order. Founded in 1540, they built schools, missions, and outposts across Asia, Europe, and the Americas. They mapped coasts, documented trade routes, and advised kings. They weren't bankers, but they controlled the information flows merchants and monarchs depended on. In the early modern world, information was currency, and the Jesuits were its most sophisticated brokers. As Europe entered the Enlightenment, another network emerged, hidden behind symbols and secrecy: the Freemasons. Their lodges became meeting places for merchants, bankers, scientists, and revolutionaries. When communication was slow and governments corrupt, a Masonic handshake could guarantee trust more effectively than any legal system. Many early industrialists and central bankers moved in these circles, which offered a stable, rule-bound space for elites to collaborate across borders. If all this sounds like the prelude to modern finance, it is. But the decisive transformation came with one family whose network grew more powerful than some states: the Rothschilds. They didn't invent international finance, they perfected it. While earlier networks relied on slow caravans and fragile letters, the Rothschilds built the fastest private communication system in Europe, faster than royal couriers, faster than military dispatch riders. When news broke, they heard it first. And in finance, information isn't just power, it's profit. By stationing each brother in a different capital, London, Paris, Frankfurt, Vienna, Naples, they built a synchronized banking machine connected by coded letters and family trust. They financed governments that didn't trust each other, moved money across borders technically at war, and funded railways. Because their network was faster than newspapers and diplomats, they moved markets before anyone else knew what had happened. The Rothschilds weren't the beginning of secret finance. They were the last great expression of a world where private networks ruled it. As the 19th century unfolded, the state finally began catching up. Public institutions, central banks, stock exchanges, clearinghouses, national bond markets emerged to tame the power of private networks. But even as these institutions grew, the networks didn't disappear. They merged with the new architecture of the modern world. And that brings us to the present, a world that looks orderly and regulated. We pretend today's system runs on laws and monetary policy, but behind that polished surface, the old machinery is still there. Shadow banking trillions moving outside regulation looks eerily like the off-books activity of the Venetian houses. Eurodollar markets, where US dollars circulate outside US jurisdiction, behave like the cross-border credit webs of the Sephardic diaspora. Offshore banking relies on trust and secrecy the Templars would recognize. Private equity and elite business forums are the new Masonic lodges, where access matters more than law. And central banks, multinationals, and sovereign wealth funds rarely act alone. They operate through conferences, alliances, and coordination groups resembling the same structures medieval merchants depended on. The architecture has changed, the function has not. Behind every modern crisis, you can still trace these old networks. In the 2008 collapse, the institutions failed, but the private relationships between banks, regulators, and investors decided who survived. It's tempting to say all this as conspiracy, but that misses the point. These networks aren't sinister, they're structural. They exist because financial systems can't function without trust, information, and coordination, and governments still struggle to provide those at scale. When markets panic, when currencies collapse, when states default, it's not the law that restores order. It's the networks, the emergency credit lines, the behind-the-scenes negotiations, the quiet phone calls between people who trust each other more than they trust the system. That's the lesson history keeps teaching. Every major public institution sits on the foundation of a private network, and that network is where the real power lives. So the question returns to us. Are we living in a system of institutions or a system of networks wearing institutional clothing? Because global finance was born in the shadows, and even now, the shadows still shape it. Thank you for watching, all the way to the end. If this gave you a new perspective on how money and power really work, hit like and subscribe, because history always has the answers. You just have to know where to look.